Hi everyone and welcome back to Stefan Livera podcast, brought to you by Bold. Listeners in the US can find it over at getbold.io. Now I'm rejoined today by Steve Lee of Spiral and Lynn Alden. We're going to be talking about their new paper, Analyzing Bitcoin Consensus, Risks in Protocol Upgrades. So first of all, welcome back to the show, Steve and Lynn.
Thanks for having us.
Great. So I had a look through this and I thought it was really cool. Let's start with what was your goal with all this? Why write this?
Thanks for having us. And I think our motivation for this project, and by the way, I'm calling it a project, not a paper, just because I think it's
cool.
Because we want this to be a long-lasting, ongoing project that lots of people contribute to, as opposed to like a one-off paper. But obviously, a paper is produced or was produced. Our motivation for it is just observing how Bitcoin consensus works. It's extremely complicated. There is no magic formula. And what we produced isn't like a final answer either. But I think it's really important to understand Bitcoin consensus because there's a lot of different views in Bitcoin. Some people are very conservative, all the way to the extreme of not wanting to change Bitcoin at all. Other people are more progressive and want to improve, add features and improve the functionality of Bitcoin at the base layer. And then other people are somewhere in between. So lots of different philosophies. There's not one clear right or wrong philosophy within that spectrum. But wherever you fall in that spectrum, I think this project should matter to you or be meaningful, because if you don't want to see Bitcoin change, it's really important to understand how to ensure that. It's not like magic that it just doesn't change. There's a lot of dynamics and variables involved, so it's good to understand what those are. If you do want to change Bitcoin, it's good to understand what are all the forces of nature at work here that would need to fall in line to support a change.
And from my perspective, I think from an investment perspective, obviously analyzing risks around the network are an important part of an investment perspective. And this paper touches on both technical and economic aspects. So it's kind of a multidiscipline project or just overall. Anything about Bitcoin is kind of always a combination of technical and economic elements. And I think one of my interest in it was kind of challenging my own complacency, because I think we lock in our mind how Bitcoin works, and that model probably has to gradually update over time as the network broadens and some of the constituents change somewhat. So, for example, the way that Bitcoin updated when Satoshi was still around in 2009 is different from how it updated, say, in 2017. And we kind of wanted to go back to first principles or just blank sheet of paper and say, what does Bitcoin look like now compared to how it might look like in 2017? How might it look in the future? And how might changes be a little bit different or have risks that we haven't considered based on prior experience?
Yeah, that's such an important point, because I think even for me, like when I was a total noob coming in 2013 and I was running Bitcoin QT, but I had no idea, what the node was doing. I just thought, oh, okay, this is what you run this Bitcoin QT thing, right? This is before it was called Bitcoin Core. And then I think in earlier days, there was a lot of confusion about, are you running a Bitcoin node or are you running a miner? And, maybe in early days, they weren't necessarily seen as separate things, whereas now they very much are seen as separate things, aren't they?
Exactly.
They are. And just to build on what Lynn said, Bitcoin is changing over time. I mean, obviously, some aspects of Bitcoin don't change at all, but in terms of the growth of Bitcoin is undeniable. Just the number of people that own Bitcoin, that are involved in Bitcoin businesses, the price, the hash rate, you pick any metric, it's 10x. It 10x is about every four years. So with all that growth, it just changes the dynamics of how do we prevent Bitcoin from changing, or if we, the broader community, want to see a feature or a change or like a bug fixes, like Stefan, I've been on the show to talk about great consensus cleanup before, as have others, whatever change we'd want, it's just a different environment today to either keep Bitcoin from changing or to change Bitcoin versus 2013 or other eras. So just updating everyone's knowledge on that is important. Another motivation for me was that earlier this year, I started seeing rumblings about, covenant changes and then not only like from developers, but certain like media influencers, like really starting to want to activate certain changes. And that just got me thinking back. It was the first time since like 2017 that I was sensing like drama on the horizon around a fork or a contentious change. So I just started thinking back to like 2017 and the different forks then and game theories and different stakeholders involved and how they acted. And I realized that I was really rusty in my knowledge. I hadn't thought about it for 7 years. And I'm like, oh, there's probably a lot of people who are in Bitcoin then who are rusty in their knowledge. That's one thing. And two, then I realized probably 95% of people into Bitcoin weren't even around then. So they not only are they not rusty, they never even had that experience that we had then. So they're probably really ignorant about such things because they just don't come across it in their daily business or life or Bitcoin life. And so I really felt like it was an important conversation to have within the space. And that was a motivation and genesis for this project as well.
Great. So let's try to nail it down a little bit. When we're talking about what exactly is changing, maybe you guys want to spell out what exactly we're talking about in terms of technical aspects of consensus. Like, what does it mean? Because I guess some people might be thinking of it in a very loose kind of social consensus sense, but that's not necessarily what's meant in a technical sense. Could you guys explain that?
Sure. I'll start. In some ways, consensus is very simple and straightforward and objective. And that's when it comes to the software code and the rules. Like there are just a set of rules around what is a valid transaction. Like if I want to send Bitcoin to Stefan, like how do I do that? What does the structure of that transaction look like? And there's just a bunch of rules that you need to meet. Like a basic rule is we can't make up Bitcoin out of thin air. Like I can't have one Bitcoin and then send two to Stefan and just specify that. I mean, I can write a transaction that states that, but it would be considered invalid and rejected by the rules that are codified in software. Also in a block, the rules of a block, a set of transactions has to meet certain rules. So those rules you can study. I mean, it's actually quite detailed and nuanced and tricky and stuff, but they're all objective. You can study them, understand all of them, and it's just written in software. So that's literally what the consensus rules are. So anyone running Bitcoin software on a computer follows those rules, and then when they're broadcasting a transaction, relaying a transaction or a block, and then that software receives those, they just check every transaction and block to make sure they meet those rules. Now, in that simple explanation, though, there's an assumption there that everyone's running the same rules on their computers. So one common question I get from people new to Bitcoin is like, oh, you say that it's a fixed supply of 21 million or certain characteristics. You can't like counterfeit Bitcoin, but how do you prevent that from changing? Like the Bitcoin 101 question is like, well, can't you just change the software? And yes, you can change the software. So I can change the software on my computer to a different set of rules. And that's when it starts getting much more complex. Because yes, I can change the rules on my computer. But if they're not compatible with anyone else that I'm connected to, well, then I'm going to be split off into my own network. So yes, I have the power and the self-sovereignty to do that. But if no one else follows along, I might find myself on an island. And that's what with this paper, and I think Lynn will help us go through the different stakeholder categories we describe in the paper. But that's where it gets really complex into what prevents certain like powers and entities and stakeholders from going their own way or changing the rules. And then if there is like broad support for changing the rules, how do you actually get that done in a safe fashion that doesn't risk the network?
Yeah. So I guess let me just sort of summarize a few of the key points there, because if you're a newer listener, and we're kind of going into a bull cycle now, so maybe there's a lot of new people listening, right? So you may not have actually run a Bitcoin node. You may just be using a Bitcoin wallet, and in that case, somebody else is actually kind of doing this, running the node for you. And so that might mean the person who's running the infrastructure for your hardware wallet, like if you have a Ledger and it's calling out to Ledger's server, in a sense, you've delegated your node running to Ledger, as in that example. Or if you are, using an Electrum server based wallet, like into you, the wallet just looks like it just works, but actually in the background it's calling out to somebody else. Or not, other users may be on an exchange, or you may have, bought Bitcoin in an ETF and this kind of thing. So again, you've kind of delegated your, let's say, your node running to that person. But the kind of bottom line, what we're trying to get to here is, in Bitcoin, there are transactions, they go into blocks and they form a blockchain. And the point is, we want to be on the same chain. So that's kind of the ultimate kind of deciding thing. And so we talk about this idea of the heaviest chain, or the valid chain with the most accumulated proof of work. So those are some of those aspects. Maybe you guys would like to comment on what are some of the kinds of changes that we're talking about here?
Some of the changes in the past, or debates around changes in the past, were around things like block size, either literal block size, which can be a hard fork, or things like pulling the signature portion out of the block and therefore indirectly expanding a block size via soft fork. So that's been one of the contentious ones in the past, and to still some extent in the present, because of the existence of different hard fork coins and ongoing discussion around that. The latest one is mainly around the expressivity or flexibility of Bitcoin scripting. So how complex of a transaction can you make? One of the trade-offs that Bitcoin has historically made versus other cryptocurrencies is that it keeps the rule set relatively simple, which reduces the attack surface, reduces a number of other things that can happen, and is simpler consensus to maintain. But in exchange, you have less flexible options compared to what some more programmable cryptocurrencies have. And there are currently different views on what is the optimal point there. Is there low-hanging fruit that you can add to make the scripting more flexible but still just as safe, or roughly as safe? Or would any changes at all be damaging in ways that we can't fully predict? So that's probably the current one that people should be very familiar with, is how much flexibility we want. And to put that in tangible terms, there are certain changes that can make newer types of layer twos or other scaling methods that become more robust if those changes are made, compared to if those changes are not made. Again, in exchange for any sort of trade-off that might come from that.
Real quick, I just wanted to point out one thing about this project too. It's really important to us for this project that it's not like picking sides. And again, there's like different philosophies on change. Like there's ossifiers who don't want to change. There's people who want to change a lot. There's Team Slow and Steady. There's all these different. This project doesn't take a position on that. It tries to be neutral with respect to that. And then secondly, this project is not trying to become a blueprint for how to change Bitcoin, or the definition of how consensus should work. It's not intending to do that. I personally think that's unhealthy. That almost like creates an attack vector. If you codify it, it becomes the way to keep to manage or govern rules. That's not the intent of this project. It's just trying to observe the different powers and dynamics within the space. And one thing I've heard Lynn say is like, knowledge is power. So we're trying to increase the knowledge of people within Bitcoin. And I really believe that. I feel like if every stakeholder, every person in Bitcoin, whatever your role is, if you're empowered with knowledge about this, you're going to make the best decision for yourself, for your business. And that's going to lead to a strong network, I believe. Whereas if 99% of people in Bitcoin are ignorant with respect to a lot of this stuff, that's a more dangerous environment in which they could be tricked or fooled or just like misled or unaware of what's happening underneath them with respect to either not fixing critical bugs that need to be fixed or changes being slipped in that really aren't healthy for Bitcoin.
Right, yeah, and I was going to ask that actually as well about whether this document should be seen as descriptive or prescriptive, but as you've answered, it's descriptive. It's not intended as a go through this guide if you want to change Bitcoin. It's not like that. And there would be many Bitcoin community members who might react to that in a negative way, because they might see that like, whoa, are you trying to, create an attack here or help people push through a change that they don't want? And I think there's perhaps let's say there's a healthy skepticism applied to people who are trying to change Bitcoin, and I think that's for a good reason. People should be skeptical. So there is perhaps a bar or a threshold that has to be beaten in order for a change to actually occur, especially nowadays. Whereas I think probably all of us would agree that in earlier years of Bitcoin, changes happened much more rapidly and with a lot less, let's say, oversight and supervision and, let's say, agreement from the different stakeholders in the, let's say, Bitcoin user base, let's say. But that's probably a good spot here to, Steve, you mentioned Lynn focused on the stakeholders. So maybe let's talk a little bit about that. Who are the players involved?
Great. So the way that Bitcoin consensus changes happen or don't happen is kind of a mix of these different stakeholder groups. And so basically the different sources of power or incentive, different types of users of the network. And we wanted to categorize our view of what they are. Again, as Steve mentioned, this is a starting point of a document, so anything is changeable. But our initial set includes 6 stakeholder groups. And that number could have been different. It could have been 4, it could have been 7, because there's different. You could potentially combine stakeholder groups, or you can separate out stakeholder groups to be more detailed. And the way that we decided on this is to base it on 2 main metrics, which is that each stakeholder group has a certain type of power that they can use and a certain incentive for which they might use that power. And there's multiple powers and there's multiple incentives per stakeholder group. And so whether or not 2 groups were effectively the same stakeholder group, we came down to, do they have either a different power set or a different incentive set to use that power? Because if they're technically different groups, but they're effectively the same in terms of powers and incentive, then by all intents and purposes, they'd be a very similar stakeholder group. So we defined it as 6. One of them is economic nodes. So that's any node that has a significant volume or throughput. So not all nodes are equally impactful on the network. Someone running their own node but barely ever using it for transactions is on one side of the spectrum, versus economic nodes of major exchanges, major brokerages, major payment processors. Yeah. Those are all impactful for defining, at least in the high volume areas of the network, what software are they running. And how are they, how do they define consensus? What transactions do they consider valid? That's obviously very important. Another one is investors. So anyone who holds Bitcoin obviously has a considerable amount of power that they can sell coins, especially if there's a hard fork, they can sell coins. And then there's miners, which, as you pointed out, used to be quite similar to running a node. There wasn't really this distinction that we have today, but over time those functions broke out, and so miners, they have the power to define what they want to put into a block as long as it meets the existing rule set, and they technically have the power to do a soft fork on their own, because that more limited transaction type is still compatible with the existing node rule set. But then I think one of the attack vectors we'll get to later can talk about what happens if miners adopt a change that economic nodes are slow to adopt. And then there's media influencers, which would include yourself and others, myself too. Basically, anyone who has a significant audience, and that therefore they can influence people one way or another, to at least some measurable degree or some significant degree, because that can be part of either educating other groups or rallying other groups, or in some ways kind of pushing back on a change or advocating for a change in many cases. And many people in the network fill multiple stakeholder groups. So it's not just like everybody just has one. Like someone might be an investor that holds Bitcoin and that also mines it, or they can hold Bitcoin in scale and they have a significant audience, or they hold Bitcoin and they develop it. There's generally speaking, people are often going to fall into one or more camps. For the last two, we split two different types of developers. So for the fifth stakeholder group, we have protocol developers. So those are maintainers and core contributors that are working on underlying Bitcoin itself. What is consensus? How do nodes talk to each other? A lot of what they do is not even changes. It's just updates. It's bug fixes. It's optimizations. Things that don't really touch core consensus, but that keep the software functioning as operating systems change over time and as different bugs and issues are identified. And then the last group is like application developers. So that could be someone making a new wallet or making some sort of new feature on a new layer 2 or something like that. And the reason we separated those two types of developers is that their powers and incentives, despite both at the end of the day writing code, they have somewhat different powers and incentives. So for example, core maintainers, their power is merging changes or not merging changes, and then nodes can decide to run that software or not. Their incentives tend to be more toward maintenance, conservatism, keeping like safety, keeping the system running is kind of the top priority for a lot of them. Whereas when you look at application developers, the power is different because you're making a product or a service that in some way builds on top of or contributes to Bitcoin, and your incentive tends to be a little bit more toward probably wanting more features if possible. That the more features you have to work with, the larger kind of product space or design space that you have. And of course, people in different stakeholder groups are all individuals, and they can have different preferences. And sometimes you can even have an incentive that goes against maybe some of your own stakeholder outcomes. But that's generally how we define these groups. And as one tangible example, there's very different levels of power between, say, hard forks and soft forks when it comes to these stakeholder groups. So, for example, in the event of a hard fork, investors are overwhelmingly powerful. They can sell the coin that they don't like in an existing hard fork, and then they can use that to buy more of the fork they do like. Whereas in a soft fork scenario, there's not a lot of immediate options that investors have. If a soft fork starts to gain consensus or fail to gain consensus, and they're on the opposite side of that view, they can only act indirectly at first through maybe funding developers or funding audience input, things like that. And instead you have economic nodes and developers and miners that they tend to have more of that upfront power if there's any sort of soft fork or contentious soft fork.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices such as the Coldcard Mark IV and the new Coldcard Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold Vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Coldcard hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, it's a really interesting, I guess, one of the classic memes is my friend Bitstein has this kind of, the Mexican standoff sort of meme. And so there's kind of a sense that people are checking each other and looking at each other and saying, is this, are we doing this or no, we're not doing that? And you also in the document spell out this concept of state of mind. So maybe you guys could walk through what are the different states of mind?
Yeah, I'll take that. I think the observation there is that like a presumption that most people in Bitcoin are in what we call state of mind. I think it's 4, which is unaware or lack of awareness. I suspect if we surveyed all Bitcoiners, the vast majority could not name like the 8 covenant proposals that are being developed right now. If we take Stefan Livera audience, it would be higher because you cover this stuff. But if you look at the broad Bitcoin space, most aren't on Twitter and don't listen to podcasts and stuff like that. They're completely unaware. Even if you look at businesses, I think if you look at like business owners of miners, exchanges, different types of Bitcoin businesses, they probably heard that there's some rumblings about covenant proposals. An even smaller percentage would be aware of the Great Consensus Cleanup, despite, thanks for having various folks on to like spread the word there, but it's still limited knowledge. So state of mind, it ranges from being aware of a change and being very, very supportive of it. Like there's like both supportive and so supportive that you're a champion. You're willing to spend time, money, energy to make that happen. The opposite of that is that you're so against something that you'll spend time, energy, money to prevent it and spread the word why we should not do it. Both of those also, you can have supporters and detractors who have that position, but it's not as important to them to spend time, energy, money. And then the other positions are unaware, which I already mentioned. And then there's like aware, but sort of apathetic, like don't really care. Yes, I'm aware of that. It could go either way. I don't really care. So those different states of mind, we define those, and then it's sort of reflected throughout the analysis of change, because as Lynn pointed out earlier, in the case of a soft fork, investors have far less power than in the case of a hard. Like if there's a hard fork and there literally is a chain split with two coins, that all of a sudden it becomes a top priority for investors to figure out what to do, right? Because the default position is to hold both coins. And so if you take no action, you hold both coins. It's arguably the conservative choice if you're sort of not really aware of the situation and don't really feel comfortable betting on one or the other. But it's a huge opportunity for investors. If you really feel like fork A is the future and the one you want to get behind and the one you think others are going to get behind, it's an amazing opportunity to double your stack for free, taking that risk. So in that situation, investors naturally become very aware. But in the case of a soft fork, like for example, with Taproot, how many investors were really knee deep in Taproot and the specifics and like really had a strong feeling one way or the other? I suspect very little knowledge of Taproot. They might just sort of check in to see, is there controversy? Or are there any developers I respect who are like, thumbs down on it? And if so, why? But if they don't see that, if it gets merged into Bitcoin Core, and the Bitcoin Core project has a long history of being very secure, security conscious, like conservative with changes. So if they approve and it gets into core, I think most investors are like, all right, like it's not going to ruin my investment. It's not going to ruin the network. But yeah, we define these states of mind though, because we think there is value for everyone involved to level up their awareness sooner in the process than later. Like a situation I think is unhealthy. If there's a precedent set for making changes to Bitcoin too rapidly, and through soft forks, and investors are sort of like unaware, and it happens in like a few years later. I doubt like if one change, like a Taproot change goes in, investors aren't going to dump their coins. It doesn't really change their thesis. But what if a dozen of those types of changes get into Bitcoin in a few years? There might be some threshold where investors are like, this is not the conservative, stable cryptocurrency that was part of my thesis. And then all of a sudden it's like, I'm going to reduce my allocation, or I'm just going to get out because it feels too reckless. I think we don't want to get to that spot. And obviously, given the pace of consensus change since 2017, we've only had one. We're not observing that today. But what in a few minutes, we'll walk through a scenario of a potential way a change could occur, which if it happened and then it became a precedent, I could see a future where there's a lot more rapid changes.
Interesting. Okay. So I mean, let's talk a little bit about that. I think one other thing that I guess I'm thinking back to 2017, right? As an example, there was kind of this bit, obviously it was the big fight about the block size, and that was probably the biggest, most, contentious one. There was a lot of contention about who would get which chain, right? Or who would get the ticker, right? It was like who would get BTC and who would be the secondary ticker, right? And that was sort of a big bone of contention. There was also this kind of aspect of people arguing about to what extent does a service provider, an exchange, a custodian, or an app speak for their users? Because that was also another thing as well, because people were, as you said, not everybody knew about it. And then there were people trying to find out, okay, what exactly do I need to know about this thing, and how do I choose which side I'm on? And, all these elements, they sort of blended in together. And, while I appreciate this, this project you guys are doing, I think it'll, maybe the future will have other elements that kind of break out, and they weren't sort of well-known things in the market or kind of broadly known, and it might be sort of a further subdivision or some aspect of that. So
that's why we make the project a living document, a living ongoing thing that can change, because this is like our initial snapshot in time, having put energy and resources into this. It's like, okay, here's our initial draft, here's our snapshot, and then accepting contributions and maintainers to over time update the document in ways that could be better than how we started it, or even if we have an accurate snapshot of what it looks like now, it could look very different in 5 or 10 years. And so it's a changeable document. And in the paper itself, when we go over the powers and incentives for those different stakeholder groups, like one of the ones you mentioned is the ability to define what is Bitcoin, what is BTC versus what is the fork. And that's one of the powers that economic nodes have, is that when you go to a major exchange, they can choose to say, okay, this is the software we're running, and this is the one we're going to label Bitcoin, and this is the one that we're not going to. Of course, media influencers can do something similar, a little bit less powerful, but they en masse can affect that perception. But that's the exact type of power that we look at, because there's multiple powers and incentives for each stakeholder group.
Yeah, that's great. And Steve, you mentioned you had a scenario you wanted to run through, or if you have a comment, obviously. Yeah.
Well, I'll run through that. And yeah, the current state of the BCAP project, we do go through a history of SegWit, but for example, there's currently no description of Taproot's activation. And Taproot itself wasn't a controversial change, but the activation had a little bit of controversy. And then speedy trial was used to activate it. And even to this day, that's still controversial. There's definitely a segment of respected developers and people in Bitcoin who feel that was a mistake. So I think, a great addition to the BCAP project would be to add that history. And as well as, a complete database would be analyzing every single change and how it occurred and what lessons might be drawn from that. That's how we can learn from history. But I totally agree. The future, one thing we've learned about activation is that every time it's different. So I think we should absolutely expect, so we can learn from all those, but we should absolutely expect the next change, if there is one, to be different. And so the BCAP project right now does cover one particular scenario. I'll describe it in a minute. But it's just, it's an extreme risky scenario. I'll caveat it that way, but it was important to us to describe as a lesson for how a soft fork can be dangerous, and just so that we all become aware of it. I suspect most people in Bitcoin haven't thought through this. So I'll walk through that, but there's many other future scenarios that would be great for other people to contribute to this project and add as well. So let's walk through the scenario that we did describe. This is a scenario set up with the following observations. Historically, all consensus changes to Bitcoin that have occurred have been merged into the Bitcoin core project, 100% of them. And I suspect most of your audience already knows this, but Bitcoin core project, it doesn't define Bitcoin. It's one implementation of Bitcoin. There's many implementations of Bitcoin, but it has like 99% of market share on the network. So it has tremendous power because basically everyone runs Bitcoin core software. So if there's a consensus change merged into Bitcoin core and it's not causing lots of controversy, the default action is just to upgrade the Bitcoin core software, as people do every year, every couple of years, every 3 years. Every actor has, economic actor or node runner has some kind of, operational plan how and when they upgrade their software. But the default action is to run Bitcoin core and upgrade whatever your update plan is. And if you're not against the consensus change that was merged, such as Taproot, the natural action is just to update that, and then you're enforcing and supporting Taproot. However, in the past few years, another historical observation is that most consensus changes were created and developed by Bitcoin core maintainers or active Bitcoin core project members. And that has shifted the past few years to where, as Bitcoin's gotten bigger, there's a lot of talented developers outside that they don't contribute to the Bitcoin core project, but they really want to see a change in Bitcoin that they think improves Bitcoin, improves functionality. And they've gone ahead and done the work to spec it out, write the code, write the tests. And these different proposals are in different states. Some are like very mature and advanced state. Others are more of idea stage. But those concepts are coming outside of Bitcoin core developers. It's unclear at this point in time whether and how and when Bitcoin core contributors will prioritize looking at one or any of these change proposals. And until they do, it's not going to get merged into core, into Bitcoin core. I mean, obviously, it needs to be prioritized by some subset of Bitcoin core contributors and reviewed. And there needs to be consensus there, and then it'll be merged into core. That's just one little part of getting a change into Bitcoin historically. It should be noted that there's no obligation by any Bitcoin core contributor to do that. They're volunteers. They get to choose how they spend their time. There's no obligation that any individual on that project has to prioritize this. Secondly, anyone can be a Bitcoin core contributor. There's no application process. It's not like a group of elite people. The people that do it are awesome, but you don't have to be an elite to do it. Any of us could contribute. Obviously, you need to have coding skill set, but anyone can contribute. So I think that's a really important aspect as well. But because we don't know if anyone contributing to the Bitcoin core project will prioritize this, I've heard from some developers who are champions of some of these change proposals that they'll build or support an alternative client that has that consensus change. And we've seen this in the past. Like back in 2016 era, there was like Bitcoin, XT and
Unlimited and these different ones.
A bunch of different clients that were built and supported. And of course, 2017, there was like the Segwit 2x, patch to Bitcoin core. And then even in 2021 with Taproot, someone built a Taproot the different activation client. And then like with CTV, Jeremy, and I forget if Jeremy authored it or if other developers that were really wanting to see CTV built an activation client for that. So there's a history of building activation clients. They've never been successful, never really gotten much traction at all. But anyway, that still is potential today. I think it should be noted that it's really important to have that option. Like, even if you hate the idea of alternative clients and think it's dangerous, and I'll get to why it can be dangerous, it's really important to have that option, because otherwise we would literally be beholden to like the 5 maintainers on Bitcoin Core, 5 people. We wouldn't be beholden to them adding changes that we don't like, but the opposite. Like, let's just say, hypothetically, everyone in Bitcoin wanted change X, whatever that is, but those 5 people who have the power to press a button and merge into Core, refuse to like prioritize it, or they don't agree, or for whatever reason they don't merge it. If we literally couldn't run or support the concept of an alternative client, we'd be stuck. That's not a healthy position. So I think it's really important that the Bitcoin network has that option, and we do have that option. Having said that, gaining adoption of an alternative client is a very, very steep hill to climb. And now let's get into the scenario, which can be dangerous, because because it's so difficult to get that adoption. If you get limited adoption to that, you can create a fragile network. Let's imagine a scenario where an alternative client with a consensus change is created. It's adopted by a handful of champions and supporters, but meaningfully, it's adopted by a few services that have been built that depend on that consensus change to offer their product that they want to sell to customers. And let's say like a few exchanges adopted as well, because they see ability to make more money through whatever these new features are. And then importantly, let's say that miners, the majority hash rate, is convinced to upgrade to this alternative client with the consensus change and start mining blocks with that soft fork. And that's the big hurdle here. But having said that, as we've discussed in this show before, Stefan, mining is very centralized right now. And like, you talk to 3 CEOs from 3 pools and you're at around 95% of hash rate. So it's a tall order, but you can imagine coming up with a business proposition that appeals to 3 people running businesses, and they might do it. Especially if they're under the impression that that change is not controversial and that there is consensus. Which is another thing we can maybe talk about with this project. We try to identify like, how do we even know how to measure consensus, and how do we even know if there's consensus? I've definitely observed people live in their own bubbles. And so the people they talk to maybe think that, yes, of course everyone wants this change. Or another bubble is like, of course no one, like only this fringe group wants that change. And I have friends in both camps right now on certain changes, and they strongly believe either like it's fringe or it's obvious, right? So if 3 CEOs think it's obvious that there's consensus, and they see a good business proposition, let's say that miners adopt that change. And again, it's a soft fork. So they can do so, and on day one, it doesn't break the network, because the whole network will happily accept those blocks. Now, in this scenario, let's say a small portion of the network starts enforcing these new rules, and they create products based on it. And let's say it's like a new decentralized exchange, or because let's say the change does make Bitcoin more expressive, so you can do smart contracts, you can do cooler, fancier things, and like a gambling casino is created. My worry is that customers of that are going to flock to that, because we've seen it before on other chains, and they're not going to care about the risk that the rest of the network isn't enforcing these rules. They probably won't be aware of it. They won't care. They're in it to make money quickly. They're not in this set of customers in this example aren't like trying to hodl forever. They're trying to make a quick buck. So let's say they start using this service, even though the rest of the network isn't enforcing the rules. There could be a lot of money locked up into Bitcoin scripts that utilizes this new functionality, the new rules. What that does is create a bounty. And it's a bounty because if miners unwind that change,
I see, yeah.
those transactions look like anyone can spend to the rest of the network. So any of us could just broadcast a transaction that spends, let's say like $1 billion is locked up of Bitcoin in these transactions. Any of us could broadcast a transaction that takes as input all the transactions that are using this new functionality and then just pay ourselves. and then get, let's say it's like 2 billion. I'll keep 1 billion for myself and give 1 billion to the miners. That creates a huge incentive for the miners to roll back that change, because as that bounty grows, and whoever broadcasts, and of course the miners could broadcast the transaction themselves as well and just pay themselves that bounty. In fact, that's probably what would actually happen.
Yeah.
And so that's a very fragile, brittle network. And what happens if they do that? Well, let's say in this scenario, 95% of the economic nodes are not enforcing those new rules. They would happily accept the new blocks they would accept this bounty claim, but it would create a chain split, because the nodes that are enforcing the new rules,
be a huge fight.
They would reject, and then it would fork. And then we'd have 2 coins. We'd have a chain split. We'd have 2 coins. There'd obviously be insane drama. One camp would be like, they stole billions of dollars. The other camp would be like, you're using rules that the rest of us didn't agree to. There's no theft here.
Yeah.
You broadcast, this transaction was valid. And it would obviously be total chaos, total nightmare. Then investors would flock in and decide which fork is valuable,
which is the true chain, and then
which is the true chain. And I've spoken with people about this scenario, and I've heard from credible people on both sides. One group thinks for sure that the legacy rules would be respected by investors, and they wouldn't go with the new set of rules that were partially activated. Another group of people feel just as equally strongly that
it's confiscatory and so on. Yeah.
That theft, and it's actually less risky to upgrade. But what's crazy then is what does Bitcoin Core do in this? Does the Bitcoin Core project then merge these rules changes because of this chaos, or some people want it? And anyway, what we definitely know, I think, at that point is there's price discovery on the 2 forks, and that is a huge determining factor in what is Bitcoin. And so another part of our analysis in this project that is one of the most exciting takeaways in my mind is that not only investors have tremendous power at that point, but we broke down segments of investors, and self-custody individuals are disproportionately powerful at that point. And I find that super liberating and positive for the future of Bitcoin. And the reason why we think they have disproportionate power is that because they control their own keys. So they have direct access, self-sovereign access to both coins, and they are able to, because they're independent, they can unilaterally act on the ownership of those coins, and they can choose to sell one fork and double down the other fork. Any investor, in theory, can do that. However, there's concern by some folks in Bitcoin about the power of institutions, and does BlackRock, are they going to take over Bitcoin? But think about BlackRock and Fidelities of the world in this situation. They are far more likely to be very conservative, and they're not going to I really can't imagine them dumping one fork and doubling down on the other when it's still unclear which fork is going to win. They're going to have massive legal ramifications. There's many people involved because they're not the owner or the key controller. Coinbase controls the keys. BlackRock,
and the underlying ETF customers are the actual,
the shareholders are the owners, and then they're just this heavily regulated guardian. So I really don't think they're going to get into the game of price discovery. They're just going to hold both, let the dust settle.
They're just going to sit and wait. Yeah.
Sit and wait.
Yeah. Interesting scenario.
And that's one thing we for the project, we had it reviewed by a number of different of these stakeholder groups. So economic nodes, major ETFs, investors, corporate treasurers. A lot of them we were able to list and acknowledge them. Other ones we weren't able to list, but we reached out as pretty broadly and pretty high level. And we had legal experts look at it. We had all sorts of different input. And that is one of the complicating factors, is that there are some entities that we judge to be able to move practically instantly. And there are other entities that they have a variety of extra people that have to make the decision, or the stakes are very high for them if they get the decision wrong legally, and through all sorts of means like that. And I think that's actually one of the really relevant findings.
This show brought to you by mempool.space, the world's leading Bitcoin visualizer. And now they've got an accelerator program. So if you have a transaction that you sent at a fee that was too low to get confirmed, now you can fix this with the mempool accelerator. The way it works, you can go and search your transaction, scroll down, click accelerator, and you don't need an account. you can pay with Lightning, and then it'll show you it's now in the process of being accelerated, and then after a few minutes, it's confirmed. And so this is a great way to help you out if you are stuck. And this can happen where maybe your wallet doesn't have RBF or CPFP, or it might help you in situations where it's impractical to go and re-sign. So for example, multi-sig with keys in different locations. And thirdly, even in some Lightning scenarios, perhaps a forced close, you might not be able to use RBF. And so in this case, the Mempool Accelerator can help you out. So keep it in mind, and you can find out more over at mempool.space/accelerator. And now, back to the show. Yeah, and I mean, this whole scenario, it reminds me as well, like I know even developers now, when they're talking about and proposing soft forks, one concern they talk about, which I mentioned, is this concept of, is it confiscatory, right? By making this change, are you screwing over people who might have locked their coins in a certain way that now you're effectively shutting them out of accessing those coins again, right? And it's kind of like, this scenario is kind of that, but kind of in reverse almost, that it would have happened, that you could argue it is a confiscatory effect, even if it was not intended to be that way. And so I guess, yeah, I mean, bottom line, I guess in this, both in that scenario and just in general, it's hopefully, it's a good thing that more people hopefully are clear about how this works and sort of know how to defend their own rights. Right now, the first class citizen is, you run your own Bitcoin node, you hold your own Bitcoin keys, and then you at least choose which chain you're on, and you know which rules you're on. But at the same time, I mean, to the point you guys were making as well about the stakeholders and what power they have, it's one thing to be running your own Bitcoin node and hold your own keys, but what if your chain that you chose is not the majority chain, right? Like, what if you chose poorly, so to speak, and you chose Bcash and everyone else went on, or you chose B2X and everyone else chose B1X. Well, you're still not, I mean, yeah, you're sovereign over your coins, but you're on the wrong side.
That's what, I think the notion that like the average user who's just running the node and isn't actually sending or receiving payments, that like the rules they choose, that they have some kind of power with that, I think that's not really the case. But but I think as an individual who maybe isn't like extremely wealthy in Bitcoin or powerful, like the way they can affect things, they can express their opinion and voice. They can have a voice, and a large collection of people with a strong view and raising their voice can be impactful. I think we did see that in 2017. Like that, my own takeaway on UASF is like, sure, if a bunch of plebs run a certain set of rules or software, I actually, that alone, I don't think is very impactful, but them saying they're willing to do it and articulating why can be impactful and then can be amplified with media influencers and really change the narrative for Bitcoin.
Yeah,
and I think the most powerful thing that I learned is the self-custody investors, where they do, like, either collectively or even whales, their ability to swiftly take action and choose a side in a fork, whether it's a futures market or there actually has been a chain split and you're betting on one or the other fork, that is incredibly powerful. And I guess I tend to think that self-custody holders sort of by definition probably get the ethos of Bitcoin better than someone who bought BlackRock's ETF or BlackRock themselves. Because if you've gone through a journey if you're going to start self-custodying. And so I feel heartened that those are the kind of people who are ultimately going to decide the fate of Bitcoin in the case of drama over BlackRock. So right. I think that's good.
And in many cases, there may be people who hold both, right? There may be people who have self-custody coins, but in their retirement account, they're using these ETFs or something, or MicroStrategy or something else, So it's kind of, as you say, you can wear many hats, right? You might be a hodler and also a miner and also a developer who's also kind of influential as a voice. You could be wearing multiple hats in that scenario. And so it's kind of interesting to see how that will play out. I think one other area that would be interesting to discuss, and I know, again, this is a very rapidly changing area, is around activation itself, right? Because there have been different methods employed and there's also an element, I guess this is debatable, but even thinking back to 2017, there's kind of an argument of like, it's kind of like, the classic game of chicken, right? People are sort of saying, I'm driving this way and you better divert because I'm not stopping, kind of thing. There's kind of an element of this game of chicken to an extent. And there are different methods of signaling activation. And as we mentioned, as you said, speedy trial, which was used for the 2021 activation of Taproot, is, let's say, controversial amongst some users, and among some developers it's seen as, no, that was actually the right approach. So maybe you guys could explain some of your thoughts on the different methods of activation, and yeah, we can take it from there.
Sure. Another controversial one is BIP8. I know a lot of developers think that there's really no advantages of BIP8 over BIP9, and there's some dangers with it. But other like the proposer of BIP8 and some developers are big advocates for it as well. And I think I saw a tweet yesterday. Someone's come up with activation parameters for Alden, or one of the change proposals with activation parameters, which I didn't look at all the details, but I think they were aggressive. They're almost certainly going to be controversial because I think it includes like a flag day, forcing the issue even if minor hash rate doesn't follow suit. So I personally don't have a strong position over like, oh, this activation method is like clearly the best and we should always follow it. I don't think such an activation method exists yet. And that's probably why in the past, literally every change I think has followed a different activation method. We're still sort of learning, and it's so infrequent to do this that we don't have a lot of experiments to learn from. But yeah. So I don't know if I have much more to say about activation other than
And that's the complicated aspect, that people disagree over what changes should be made and then also how to make those changes. And like Steve pointed out, the changes happen so frequently that what worked in one era might not be the right answer for the next era, or just even if it is right, it just might be a different solution just because the sample size is so small. And a tangential observation we've made is that one of the powers of influencers is not only can they potentially change consensus itself, like they could advocate for change or against change and therefore change people's minds, but another thing they can do is shape how people perceive consensus to be. Because Steve mentioned earlier that people can be in their own bubbles, and they could think that a consensus change is very popular, or they could be in a camp that thinks it's not very popular. And it's actually hard to know for sure how objective you're being when you're assessing the field and seeing what percentage of major stakeholders seem to be on board with this change or not. And one of the things that some deceptive influencers could do, I wouldn't consider this a very honest tactic, but one of the things that is doable is to basically purposely make a change seem more supported than it really is. Or in theory, the opposite, where something is actually popular and you're trying to downplay how popular that really is. Because a lot of kind of like with Taproot, for example, a lot of people didn't really know much about Taproot, but they saw that there wasn't really drama, that there seemed to be consensus. So they say, okay, it seems like I'm on board then. And so any sort of change like that, you can get people on the majority side that might otherwise not know it very well, just by making them think that they're on the majority side. And then that becomes kind of self-prophesizing. Right. And I can imagine, especially in a world with like AI bots or something like that, you could have,
AstroTurf campaigns to kind of make it look more popular or not less popular.
You can say, look, everybody's in favor of this change, and you get a lot of people genuine on it, but then you also have a lot of bots, and there's kind of some interesting game theory around. If we imagine what would a scenario look like where a controversial alternative client was launched with some degree of grassroots support, but then how do you measure how actually supported is it compared to the status quo?
Yeah, fascinating. And I think you're right. I mean, this has existed for some time, this concept of whether something is being astroturfed, right? Like historically just bots, and now in the AI era, maybe that's easier to for people to kind of spin up like NIM accounts, whether that's on X or on Nostra, and fake support for or hate or dislike of a particular proposal. I guess to an extent, we've seen people try to use this kind of web of trust kind of idea to sort of say, oh, okay, this and that well-known person, they like this change. They like CTV or some other whatever change. And so I guess there's an element of that. So reputation does, play into it a bit. So there's that. I think one area that is a common area of confusion that I would love if you guys could maybe give us your take on this. Why is Bitcoin not a miner democracy?
Well, let's first understand what you mean by miner democracy, meaning a hash rate or a hash is a vote.
Yes.
That's what you mean by that?
Right, because this is a common confusion, right? People have this idea that, the miners could just push through any change as long as they all, quote unquote, vote for that change.
That's easy to answer. Actually, the hypothetical scenario we discussed previously is one answer. So you can imagine, let's say 100% hash rate votes or decides to enforce some new rule set. If none of the economic nodes upgrade and enforce those rules, then yes, and let's assume it's a soft fork, so it's a backwards compatible change. So yes, the miners unilaterally can do that and produce blocks, and there could be transactions within those blocks that support the new rules, but it gets into this very dangerous situation, this bounty situation that we described before. And if it's even more extreme than as defined before, if 0% economic nodes support the new rules, or just one does, and let's say a bunch of money is locked up into scripts using the new rules, the miners would unabashedly claim the bounty because there's almost no downside risk, and they just take that money. So you have to have enforcement of changes by economic nodes to actually have a longevity around a change, a secure change. It's a must-have. And then, as we pointed out as well, ultimately, investors have the most power out of all these stakeholder groups. I think there's no denying that. Whether it be, we went through the fork scenario where, the price action and determining the price of fork A versus fork B is, almost the full deciding factor on what is Bitcoin. But even without forks, if investors become, feel disenfranchised or just Bitcoin's no longer what they invested in their thesis and they sell, if our $90,000 Bitcoin or whatever today goes to $9,000 or $900, sure, there might be some people around still talking about peer-to-peer money, but it would at minimum be a devastating impact on the industry for a decade or more, setting us way back, if not the death knell. So investors are ultimately, I think, all powerful. I think there's no question miners have power, play an important role, but are definitely not all powerful.
Yeah,
and thus don't have votes. No one should think of this as a democracy or a voting system. In fact, read the paper, read the BCAP project to understand how complex it is, and the powers and incentives from all 6 of these stakeholder groups, and see how each of them have unique powers that are meaningful, but no one has unilateral power. The only one you could argue, I think, that has overwhelming power is investors. But I think it's too simplistic to just define
to say that they decide everything. Yeah,
investors decide everything because of the time scale. Where in the life cycle of a change or where in the life cycle of Bitcoin do investors assert their power? It's not each and every day. And because of that, it's more complex as described in BCAP.
Yeah, they could be all powerful too late. And so even their own interests are impaired now because they wanted Bitcoin to be a certain way. Soft fork changes that they had little direct influence over. They ultimately can then decide to sell or reduce their position, exit the project. But even they might not end up being happy in this scenario because they're I wanted old Bitcoin, and that's impaired now. And it's really hard to rebuild network effects and regain a prior consensus state. So that's where I think that even investors, as powerful as they are, it's not as though whatever they want could potentially happen. There's a number of other stakeholder groups that could do things before they have a chance to act that even themselves are not happy with the outcome that comes from it.
Yeah, and it's interesting because I recall this is like a big argument in the 2016-17 days where there was sort of people trying to argue that the miners could decide what was going on, or maybe it was also confusion, right? People were sort of taking what should have been understood as miners signaling readiness for miners are quote unquote voting for that change, and they can decide unilaterally, which is obviously not the case. And I think the other element people were saying in those days was also that the hodlers or the investors, they can just sit and wait. Whereas miners they have ongoing costs, right? They're paying electricity, they're paying, they're trying to maintain their operations. And so in that sense, the investors who really wanted it to go a certain way, they were the ones who ultimately were able to decide. Though, as you say, Steve, they can't just decide everything on their own, but they kind of have arguably the most power. And so, yeah, it's really interesting that you sort of see all these different dynamics. Some of this is, I guess, you're trying to codify the kind of unwritten rules, or kind of codify the understanding a little bit more in terms of how these different dynamics play out. So I guess when it comes to how things are going, in the future, do you guys have any thoughts on what that might look like, or what elements of this may change?
We'll see. Well, first of all, I hope a goal of this project is to create more awareness of this and just leveling up people's understanding. So hopefully we're successful in that. And again, I think, knowledge is power. The more people in Bitcoin that understand these things, we're going to get better collective decision making. This doesn't directly answer your question, but I should let the audience know, Lynn and I weren't the only two people involved in this. A gentleman named Ren, he goes by Ren, he was crucial to this project. He did most of the writing of the project. So he's been really wonderful to work with. He told us that a lesson that he has a lot of experience in other cryptocurrency ecosystems, and he has a much deeper appreciation for proof of work over proof of stake after working on this project, and a deeper appreciation for how changes are made and not made on Bitcoin compared to other ecosystems. They're way more centralized. It's way easier to make changes. And I think other ecosystems view that as a positive thing. We're staying up to date with the latest technology, and Bitcoin's slow, dead, boring, it's behind. But I think people in Bitcoin appreciate that conservatism, and he just had a much, because of it's so complicated, how Bitcoin quote governance works. How do we keep things consensus that I think anyone who reads this, hopefully that's a takeaway they have as well. As far as what to expect to change, I think we need to monitor each of these stakeholder groups. How does each grow over time, and do their powers grow disproportionately? I'm not too worried about that, but if that would be something to monitor. Again, we don't know how future changes, if and when they'll occur, how they'll be activated. Observing that would be important as well.
Yeah, a lot of my takeaways were positive. The observation, because one of the big concerns I get in interviews or from readers is it a problem if more and more Bitcoin end up in exchanges or corporate treasuries? Does that centralize the network in some way? And one of our assessments is, because they, in the event of a hard fork, they are more likely to sell slow. They diminish their power even if they have a fairly substantial number of coins. Obviously, there are certain thresholds. You wouldn't want coins, in too few hands, but that not all hands have the same speed and impact, which I think is heartening. And then two, it just kind of showed how difficult it is and how much kind of consensus you really need to successfully launch an alternative consensus client, and that the status quo generally geared towards the existing situation. It would take a pretty overwhelming, maybe even more overwhelming than I initially expected, level of change, because of the risks involved and because of the details involved in a change of that sort. So I think that I came away viewing the network as maybe even more robust than I already thought it was, and I already had a high opinion of the network as a long-term, semi-long-term holder and investor and analyzer for it. But it's actually in many ways stronger than I expected. And a lot of these game theory components, I think, fall on, thankfully, the right side of stability. But for those edge cases, as unlikely as some of them may be, that's why we wanted to explore them, because if anything, that could reduce the possibility that these kind of messy, contentious changes happen due to entities that weren't even aware of what some of the risks are. So it can't eliminate the fact that there are contentious opinions that are different, and again, the project doesn't take a side for or against any given change. But the biggest tragedy would be some sort of negative impact through ignorance, that certain stakeholder groups weren't even aware of things that they could have done to reduce that from happening. So hopefully the project does some small way of mitigating those tail risks.
Mm-hmm. Yeah. And I am aware, I mean, I think, Steve, you're probably closer to this than I am, but as I understand, even in the world of Bitcoin Core, there's an effort to try to have the consensus engine, let's say, separated. And so maybe that's one example. Maybe in the future, if that were to happen, then maybe that might open the pathway for more alternative clients in the future. What do you think?
Yes and no. Spiral Funds, Sebastian, who's working on that the last couple of years, he is making really good progress. So I think it's a very positive change if Bitcoin Core can actually become Bitcoin Core, meaning the core software that is the most essential to the health of the network and functioning of the network is separated from like Bitcoin QT and the GUI wallet, the CL wallet. Separating that is just good software engineering. And as you said, it does, it allows for more alternative clients without taking the risk of not using Satoshi's original code in the consensus engine. I think it's good and healthy for the network. But with respect to what we talked about with consensus change, even with that kernel from core and then an alternative client built on that, if that project adds a consensus change, still most of the barriers exist. I think I guess it would reduce the barriers to adoption a little bit, because if I'm running a multi-million-dollar business and I've had really good luck, or not luck, but a good experience with Bitcoin Core, it's been secure, hasn't lost me any money, and then but I do want this consensus change. I'm a supporter for it, but it's only in this alternative client. If that alternative client is if it's based on this kernel, I guess that would make me feel comfortable. Having said that, though, most alternative clients where the goal is simply to add a consensus change, they're going to fork Bitcoin Core. So it's going to be all the same software. The risk there that you need to contemplate, and our project does go through like a set of questions that any business owner or node runner should walk through just to make sure they have a comprehensive decision, is like, who's going to maintain that project going forward? Are they credible developers? What's their track record? Are they going to be around in 3 years? Are they security conscious? Are they conservative with changes? Or do they match what I want out of the developers for a project? You'd have all those same questions with an alternative client based on Bitcoin Core kernel as well.
Yeah, one quick observation I would make is that so I'm supportive of that project to separate the kernel and modularize aspects of that. But I have heard from some people in the more conservative side of the change spectrum that are very influential, some entities there, that they actually do have that concern that if it's modularized, that they'd be more concerned around the rise of alternative clients and either intended or unintended chain splits that happen from that. So I don't, it's not a view that I particularly hold, but it is something that I've heard articulated from some people we might know.
Yeah. Okay. Well, really interesting stuff. I will obviously put the links in there, and as you guys said, this is a living document. But yeah, I thought it was a really great read. Who knows? Maybe it would be good to have it as a little mini booklet or a novel or a little thing like that to kind of give to people. Maybe you would have to update it, and maybe it would be like, this is the 2024 version, and there's future updated versions. That could be cool. Any final thoughts before we close up?
Yeah, just building what you just said. Again, it's an open source project. It's the beginning, not the end. So we very much welcome not only people to read it, But those who are inspired, see spot ways to improve it, please engage. You can file a GitHub issue. If you really want to engage, you can make the change yourself. Open up a pull request, and there'll be a community waiting there to review it. We intend to be active in that community, and we're very motivated to keep improving this project.
Fantastic. Well, that's it. I think I'll make sure the links are in the show notes. But the project, just for anyone who is driving and can't get the thing out, it's analyzing Bitcoin consensus, risks, and protocol upgrades. So yeah, Steve and Lynn, thanks for joining me today.
Thanks for having us.